$50,000 in extra interest costs could be hiding in your personal credit file right now, damaged by a business credit card you thought was separate. You've been told business credit is isolated, that your personal guarantee on a business card only affects business lenders. Here's what's actually happening. American Express, Chase, and Capital One are reporting your personally guaranteed business credit accounts directly to Equifax, Experian, and TransUnion, your personal bureaus. And if those accounts show high utilization, late payments, or are new inquiries, your personal FICO score is dropping 5,100 points without you realizing it. 5,100-point personal credit score drop increases 30-year mortgage rates by approximately 75%. On a $400,000 mortgage, that's $10,000, $15,000 in additional interest paid over the life of the loan. Multiply that across a mortgage refinance, a home equity line of credit, and business credit facilities over 5 years. You're looking at $50,000 plus in cumulative rate premiums, money transferred straight to lenders because of a misunderstood guarantee strategy. Small business owners who personally guaranteed business credit cards 2-3 years ago are refinancing mortgages and applying for business lines of credit right now without realizing their personal score was already damaged. Their lenders are pricing in that damage. They're paying the premium without knowing why. Let's break the hidden mechanism. When you apply for a business credit card at Chase, American Express, or Capital One, the application asks, do you personally guarantee this account? You click yes, because you assume it's a standard business requirement and because your business is young or has thin credit. What those terms and conditions actually say, buried in the fine print, is this. This account will be reported to consumer credit bureaus in connection with your personal guarantee obligation. That language means dual reporting. The card issuer sends payment history, credit limits, utilization, and inquiries to both business credit bureaus and your personal FICO bureaus. Your personal credit score starts tracking a business account you thought was separate. Here's where it gets worse. Business credit cards, especially premium cards with high limits, have different utilization patterns than personal cards. A $50,000 business credit line with $35,000 balance looks like 70% utilization on your personal bureau. FICO weights utilization at 30% of your score. A jump from 20% to 70% utilization can drop your score 40-60 points immediately. Add a hard inquiry and you're at 5,100 points total. Now your personal score drops from 760 to 660. You were prime territory for mortgage rates around 5%. At 660, lenders price you into 707, 25%. That's 050. 75% difference compounds. On a $400,000 refinance at 30-year amortization, you're paying $10,000, $15,000 more in interest than you would have at the higher score. Federal Reserve survey data confirms this. A household in the $200,000, $500,000 income band faces exactly this rate premium structure. For business owners, the damage cascades. Mortgage rates spike, business lines of credit become more expensive, personal auto loans cost more, and insurance rates climb. All because a business credit card is quietly reporting to personal bureaus. Most accountants and business advisors don't catch this. They tell you business and personal credit are separate. That's technically true in theory. In practice, the moment you personally guarantee a business credit product, the separation dissolves. Your personal credit file becomes the collateral backstop. The fix starts with an audit. Pull your Equifax, Experian, and TransUnion personal credit reports at Annual Credit Report. Calm right now. Look for business card accounts you don't recognize on your personal file. If they are there, they're reporting. If utilization is high or there are recent hard inquiries, your score is already damaged. Second, negotiate removal. Contact the card issuer and ask whether the personally guaranteed business account can be released from personal guarantee and converted to entity-only reporting. Some issuers will do this if your business credit is now strong. If not, the account stays live on your personal file, and you manage utilization under 10% to minimize damage. Third, for future business cards, seek issuers that offer no personal guarantee options or entity-only reporting. A few business cards now allow this if your business has an EIN and some credit history. The dollar impact is staggering. A 75-point score drop costs you approximately $12, $18, $000 per $400,000 financed at a 30-year mortgage rate. If you're also refinancing a home equity line or securing a business credit facility, that multiplies. Over 5 years, cumulative damage from a mismanaged personal guarantee strategy on business credit cards easily hits $50,000 plus. Your credit profile is your leverage. Protect it.